Up next, what's going to happen in the grain markets? A pretty common question out here at the show. Thankfully, we had an expert join us here on Market Journal to give us his thoughts on that exact question. Mark Gold is with Top Third Ag Marketing, a division of StoneX Financial. He resides in Chicago. He joined us out here at Grand Island, and I began by asking him about the current price of corn and soybeans. Talk about current prices of the row crop commodities, in particular corn and soybeans, not the prices farmers want around harvest time.
Right, we're at low prices in both corn and beans out here. We know we're going to have pretty big crops out here. How big, nobody knows. We'll get an idea on the USDA report on Friday. So, overall, I've been telling farmers it really doesn't matter whether the yield is 188 or 184. Yes, it's a difference, but either way, we're still going to have big crops, big corn crop, big corn carryout. We got a problem that too many farmers are still holding old crop corn. So I think what we've got to think about doing here is, what are we going to do with this grain at harvest? We're going to put it in bags, we're going to pile it somewhere. I think all those things are going to happen. But what I want farmers to know is, once we get through this harvest, and maybe we pressure some prices even deeper than we would like it to do, don't give up hope. If you do sell the grain, in my opinion, you need to buy a call option sometime after harvest to keep the upside open. Markets go in cycles. Prices go up, prices go down, and so on. And right now we're low, but at some point we're going back up. Something will happen.
Historically speaking, you've followed the markets year to year for a very long time. I won't say how many years, but
you can tell them 52 years. I'm older. I turned 71 this year and been doing it since really I was a kid. And if you would have told me when I was 18 years old I'd be in agriculture, I would have laughed at you. I'm a Chicago guy, but I fell into it, and I've never regretted the decision I made.
From that experience, though, farmers, if they're gonna hold for the most part as much as they can at home, put it in a bag, put it in the bin.
Yeah.
They want to know, how long do I need to hold on to this? When could things turn around?
Well, it's hard to say, but what I would do is start looking at some of the carryovers that are in the market. Right now, the carry in the corn market is about 30 cents to store it and to go out and sell a deferred contract. So many farmers, though, they'll put it in the bin and say, well, there's carry in the market, so I don't have to go out and do anything. Well, you have to capture the carry, you have to sell that deferred contract. Even if the price is low, sell it, get it out of your hands, get it into the merchandiser's hands where it belongs, but then buy a call option. Because once we get the grain out of the farmer hands, that's when we can see the market lift.
Sure.
I've always said, American farmers ask me every year, how come the prices only go up when we don't have the grain? And it's because you don't have the grain. So what we want to do is get it out of the farmer hands, get it to the merchandisers. That allows the market to go up. But once you've sold it, you don't want to just give up on it. You want to re-own it with a call option. Spend 10, 12 cents to stay in the game.
The trade discussions have really influenced the markets, in particular soybeans this year. A lack of Chinese demand has been one of the factors that analysts keep telling us has led us to the soybean prices. Do you see that changing before the end of the year?
Probably not. I think we've dug ourselves a hole with the Chinese out here, and maybe rightfully so. You got to punish the Russians for what they're doing in Ukraine, in my opinion, and the Chinese keep buying Russian oil cheap. So how do you combat that? You try to do it through tariffs. I'm not sure it's working, but I think after the first of the year, I think things might change. The Brazilians are going to plant a big crop, but I look at some of these weather trends, and I'm just not sure that we're not in for some very hot and dry weather. So again, if you're going to put the beans in the bin, you got a 50-cent carry out to May beans out there, out to July. Capture that carry, sell the deferred, and buy back some call options to keep the upside open. But I think we'll see what the report says, but right now we're looking at a 290 carry out in the beans. If we lose just 1 bushel an acre, now we're talking about much tighter carryouts, potential for the market to move higher. And let's not forget, we're exporting some beans out here. A lot of countries, Mexico, Taiwan, South Korea, places we haven't really sold a lot of grain to, have really stepped up, and we see these numbers every week. And in the unknown category, which we still believe is China, Somebody's buying those beans, and my guess it's the Chinese because there is a price advantage buying the U.S. beans right now.
Let's jump from row crops over to cattle here as we're at Husker Harvest Days in Nebraska. Need to talk to cattle markets, get your thoughts there. On last week's show, our analyst said, you know, if we lose $10, not a big deal on the futures, but if we lose 20, watch out. That's the warning sign. What's your warning sign? Here on Tuesday, we visit Wednesday. We did see cattle down quite a bit. We've turned our things around and we're kind of mixed as the midday session continues.
Yeah, on Tuesday we were limit down in the feeders, down $5-6 in the fat cattle. We've seen this before in this market. And every time we've either had a key reversal, and we've had 5 of those key reversals in the last several months, or we have this limit down, the market always comes back because the cash has stayed strong. And even to yesterday and today, the cash cattle didn't go down nearly as far as the futures did. That's a potentially good sign. But I'm watching also the box beef market. We got up to 417 and change, back down under 410 now. We're still above the highs we made 2 months ago at 397. If we start getting under 397 now, that tells me that consumer demand is backing off. The American housewife may not be buying as much steak, as much hamburger, shifting to other things. There's no cheap alternative, but there's pasta, there's fish, there's chicken, there's other things out there, and that would be a key thing. Now, we did yesterday close under the 20-day moving average, under the trend line. That's a warning sign. If we close bad on Wednesday, down another $3 or $4 in the feeders, down another 2 or 3 in the fats, I think maybe the cattle have finally seen its day.